What's going on, everybody? Today is May 15th, 2023. In today's video, we're going to look at how to find a daily bias and how to use it throughout the week in order to find high probability trades. So what is the most important concept to understand when finding the daily bias? ICT teaches that the weekly expansion candle is one of the most important things to know. So if you can figure out whether the expansion of the weekly candle wants to be up or down, that gives you your weekly bias, and that's, to be honest, enough of a daily bias as you would need. And then obviously once you get good at that, you can refine down to a lower time frame like the daily or the hourly charts and find a more precise bias as to where price may pull or where it has not pulled already. It's also important to know that you do not need a daily bias to be profitable utilizing ICT concepts. It's just another tool to have in the bag to understand where the potential draw on liquidity is from a higher time frame, so then when you go into lower time frames you can be more precise with your entries and exits. Okay, so first we're going to look at the weekly expansion candle. So this is the weekly chart. So typically on Sunday, right before the market opens, I'll look at the weekly chart and try and find a potential draw on liquidity for the week, and that will be a good weekly bias as to where the potential directional bias would be in placing trades. So the things you're going to be looking for is obvious untapped liquidity, that can be buy side or sell side liquidity, and then fair value gaps, which will be your bisis and sibis, as well as volume imbalances that occur on the weekly and daily time frames. So if you look here, this is from July of last year. We have a large expansion candle upwards, and so if we're predicting next week, what are we going to be looking for? So if we look here, we have this weekly imbalance, this weekly sibi that we've traded completely through. So what would be the next potential target, the most obvious target as to where price would draw? So if you look here from this previous week in May, we do have this untapped high, this swing high, so this 3-candle pattern, but of a lower high, higher high, and a lower high. That's a swing high of buy side liquidity. So that would be the next target as to where my weekly bias would be. It's just a simple pull of where I think the weekly candle will expand to. So if we accelerate this forward, that finished out the week. So then this next week, I'm expecting higher prices throughout the week, and you can see we did get that. So if we look at the next week, still failed to get that high. So I am expecting higher prices as well for this next week, and you can see we do tap into that high and expand through it completely. So if we look here as to after we expanded higher, what will be the next potential draw on liquidity? Well, if you look here, we have this small imbalance down here, and we have a smaller imbalance right up here at the top. So if we play it through and we expand, I'm expecting a fill of this higher imbalance just because it is closer, and since imbalances and liquidity work as magnets, the closer you get to them, the stronger they pull. I'm not expecting a dip down into this section. I'm rather waiting for a fill of this weekly imbalance. As you can see, we do fill it and then start to reject lower. So now with this weekly candle, I'm expecting either a dip lower into this fill, since we just ran buy side liquidity and tapped into the weekly imbalance, so I'm expecting lower prices for the weekly candle. As you can see, we do expand lower into that fair value gap. Same thing here. I'm just expecting a chop around this imbalance, and it goes on and on of where you think price will draw to, just liquidity wise, or imbalances, bouncing back and forth between the two. We filled this sibi right here. You can see we do not have any obvious points of liquidity on the lower. We have this swing low as well as this untapped sell side liquidity, but we actually did leave a large imbalance above us from the previous weeks, so I'd be interested in seeing a draw up that way before we head lower. So the weekly expansion would be going higher, and the overall draw would be this lower liquidity. So you can see eventually we do pull up into there. And then obviously for this next week, since we did fill the sibi already, we're going to be looking for the untapped liquidity down below here and down here for the following weeks. As you can see, we react nicely, and then eventually we continue lower and lower, eventually running out the sell side here and sell side below here. So the questions to ask then of where to find your daily and weekly bias is, one, where has price been? So this is where has it ran out previously, buy side or sell side liquidity, and what imbalances have it filled prior to the weekly expansion candle. So this makes it easier to point out the checklist of what it's already done and what it's potentially going to do. Second is, where's the drawn price? So this would be large untapped liquidity pools, relative equal highs and lows, as well as imbalances. Third would be, what has price failed to do? So this is sometimes more important than what it's already done, since failure to do things also gives bias. So say there's an imbalance above in the previous week and we failed to get up there and instead we're trending lower. This indicates a very weak market. So I'm expecting lower prices, as in sell side liquidity pools, to be hit before we run out this. So sometimes the failure to fill or tap liquidity sometimes gives more of a bias than what is already done. This also can be due to SMT between the indices. So if this is ES and you have NQ filling the gap as well as YM filling the gap, sometimes that's a telltale sign as to why ES or one of the indices is failing to do something that the other two are due. And this indicates a weaker or stronger market between the averages. So the fourth thing to look at is, how long have we stayed in premium or how long have we stayed in discount relative to the current dealing range? So I'll show you an example here where we've been staying in this premium end, where premium is the top, discount is the lower end. We've been staying in this premium end for a while here. So you'd expect us to distribute these premium bought puts and shorts into a discount. So I would be expecting lower prices in the form of sell side liquidity or imbalances within this price leg as potential draws for the daily candle. So when finding your daily bias, it's also important to use the daily 4-hour and 1-hour chart to narrow down your precision. So I'll show an example of why this is important. You have a swing low here that's been taken out, and your daily bias, you don't really know where it wants to go. It could go down for this low, but we also have this larger imbalance. So you may be wondering, how far can we get into this imbalance before it reverses down? If we drop to the 4-hour chart, you can see in this same exact price leg we have multiple imbalances, as well as this higher one that hasn't been filled. This lower one's been filled with this price movement here, so you'd be more interested in refining it down like that. Then if you drop down to another 1-hour chart, you can see we have this larger imbalance right above that's also been unfilled right here. So you can overlap these fair value gaps to create areas of high probability. So if you go back to the daily chart and we accelerate this forward, we do have a reversal point there. But if you just drop down back to the hourly chart, since we took out sell side, right? You drop down to the hourly. You can also see setups form. So this black line will be the sell side. And you have a breaker here, bullish breaker, where you have a low, high, lower, low. And these last two up close candles will be your bullish breaker. Then you have fair value gaps within here that overlap, which if you've watched the previous videos that I put out about the unicorn setup, this is a perfect unicorn setup. If you haven't watched that, go watch it, you'll make more sense. We dip down into here. So if you're looking at an hourly chart, your daily bias could still be long and you could use this as a potential buy. But if you drop down to like a 15-minute chart or something lower, you can see we have this imbalance as well. And we perfectly touch this right at 9:30 in the morning and then accelerate upwards. So that could be your higher time frame bias as to why price is doing what it's doing. So if you can drop down to a lower time frame on this Thursday and you have your daily bias is still long, you can see this unicorn setup form on the hourly chart and utilize that to go higher. Going back to the daily, so it's probably, you're wondering how far can we go into that imbalance. So if we accelerate this forward, you can see we do go all the way up into that hourly right here. If you go to the hourly chart, you have this large imbalance right up here, and then we have a large news driver eventually that puts us away like that, lower. And then if you're looking from another daily perspective, this placed away lower, you would expect your next drawn liquidity for the day, the next following week or day, to take out this sell side and eventually run out these sell side liquidity pools down here. So if you accelerate it forward, we do get that tap, small imbalance that we fill. And you can just continue to do this over and over throughout the weeks, just to find imbalances or liquidity pools that prices are most likely to draw to. And then you can use the 4-hour and the 1-hour to precisely pinpoint where price is likely to reverse or to draw to. So if you use that 1-hour chart, you can see that we just tapped perfectly into that higher sibi on the 1-hour before displacing away. So some tips and tricks when finding daily bias. Obviously, first go from the weekly down to the daily to the 4-hour to the 1-hour. Typically, I wouldn't go lower than the 1-hour chart just for a daily bias perspective, especially if you're trading on the lower time frames. I don't think you need to go lower than a 1-hour chart, but also do your own back testing and see what works for you. Second thing, consolidation and expansion follow each other. So if you have a large expansion move towards liquidity or imbalances, and it reaches that, typically the next day or the next following days, you won't have another large move. It'll chop around in a consolidation phase. So you also have to be aware of that when finding your daily bias, as those are low probability days. And also be aware of news events that can cause these expansion moves and consolidation moves that follow. Another tip is volume imbalances on the daily chart are very important. So if you have an area where there's no candle body that overlaps with each other, that's a volume imbalance. So something like this, where you have candle body, no candle body here on the Monday, this is a volume imbalance right here. So these are also very important imbalances that can be used when finding your daily bias. As you can see, it's filled multiple times and respected, especially in the following weeks. Another tip is to use new week opening gaps as draws on liquidity. ICT has done his own videos on those. I suggest you just check those out. He does a great job explaining how to find them and how to use them within the week. Another important tip is that if the indice draw is not clear for the daily bias, you can use DXY. DXY is inversely related to the asset classes. So as the indices are headed up, DXY will be headed down, and vice versa. So if you can find a clear draw in DXY, sometimes that can be helpful when finding your daily bias as well. And you can compare that with your indice draw to get a stronger bias. Okay, now we're just going to look at some examples of finding daily biases and how to implement them. So this was on Tuesday, 4/11. If you look at the picture, we're trading within this sibi, this 4-hour sibi that's outlined, and we've already tapped it and left it. Failed to sweep the sell side. So as I said before, the failure swing sometimes is more important than what it's already done. So we have already purged it, failed to sweep the sell side, and I was expecting us to trade through it and then hit this buy side liquidity. So my daily bias for the day would be bullish prices. And then you can see we also have this breaker, and technically it's a mitigation block since we failed to sweep the low, that I wanted to see used to support price to go higher. And then you can see the next day, the following days, we've swept that buy side liquidity that I was outlining. And then the next day I was expecting lower prices as our daily draw, since we had already swept buy side, sell side has been failed to sweep, and then we had imbalances that I wanted to see fill before we went lower. Here's another example. We have untapped liquidity above us, and we're above the 50% mark. We have multiple fair value gaps below that should support price. So the daily bias was that I wanted to see higher prices and that the buy side liquidity be taken out. And you can see the next day we do take out that buy side liquidity. Then we are trading within this fair value gap. So I wanted to see this fair value gap respected, and then we trade lower into the sell side liquidity. So it's just bouncing between imbalances and liquidity pools, just back and forth. So it's whatever it's closer to, technically, is just the draw for the day. So you can see we respected that one nicely. We headed lower for the sell side, just as expected. And then we failed to sweep the sell side, and we displaced away. Here's another example where we have this high that was purged on the 18th, and then we started getting lower prices since then. So I wanted to see this hourly, this is the hourly chart, I wanted to see this hourly sibi that I outlined in red to resist prices, and it goes lower. So the daily bias would be lower prices, targeting the sell stops here and below here. Then if you look at the next day, we did end up getting those sell side liquidity points purged, and then we were filling another imbalance. So we had large expansion move lower, expecting consolidation. So that next day I was not expecting a large move up or down. We had this sibi that I was expecting us to just chop around since we got expansion, so I just wanted to see consolidation follow after. Then here's the example from this week where we are kind of just chopping in the middle of this dealing range. So it's hard to find a draw, especially on the 4-hour or the 1-hour chart. We just have small imbalances here, buy side and sell side liquidity, so you can argue both sides. That's when the DXY comes in handy, because DXY, this is the 1-day chart, has a much clearer view of where we're likely to head to next. And since liquidity acts like a magnet, we have a high here that's been untapped as well as a swing high here that's been untapped. So my draw for DXY would be higher. Since it's inversely related to the indices, if we have bullish prices expected on DXY, we're expecting bearish prices on the indices. So you can also use this as your confluence for your indice daily bias. So I was now expecting that this sibi would be respected and we head lower, and then the hourly chart, you can refine it down into this one. We fill that sibi and then head lower for those sell stops, and we did eventually get it. I'll put a picture up on the screen right now of the displacement lower that we got into the sell side liquidity pools. Alright, that'll do it for today's video. If you have any questions about the content within this video, please leave a comment and I'll get back to you as soon as I can. The Discord and Patreon link will be in the description if that's something that interests you. I have live streams, live callouts, as well as the daily biases that I just showed, and all the trades and macro trades that I take throughout the day. Daily reviews should continue the rest of this week, the days that I'm not live streaming within Discord. Until the next video, good luck and good trading.